Okay, so now that you know what the level 1 and level 2 are, we're going to go into more detail about the prints. And the prints essentially are each trade that has gone to the market. Like we mentioned before, the level 2 show you the open orders but do not show you the hidden orders. And what we'll be going over in this chapter are what the prints are in specific detail and each detail about the prints. And this essentially is what tape reading is, because we are gathering information from the prints along with the level 2, but more so the prints, to actually read the tape and see what's going on in real time on that equity. So what are the prints? The prints are an important indicator. The prints, also known as time and sales, are located on the right side here, and they show you each transaction or trade that has gone through. They could be on the bid, which are shown through the red prints, could be on the offer and green prints, or between both, which means the spread, which is usually shown in white prints. They show you which exchange they came from, the price, and the size. Remember, this is multiplied by 100, so the last trade was for 100 shares at 161.23, and it shows you, where the stock traded at and the last transaction. So this is the last transaction, the previous transaction was there, and so forth. And each time a trade is put on, it'll come from the top down, and these are the previous trades. So the prints are an important piece of reading the tape. Like I mentioned before, it shows you in real time what's going on. It shows you the exact trades of what just happened. For example, the last trade was at 161.23 for 100 shares on the offer. And the prints are usually what old school traders use to determine whether a stock was strong or weak. Remember, they didn't really have charts in real time. The technology was around that time. So they they looked at the prints and see where the stock was trading and see if it was strong or weak. And with the prints, you're able to see strength or weakness and where there are buyers and sellers at a certain price. Because you're gathering the information from the prints and analyzing it, and you're able to see if a certain stock is strong or weak because of that. So to go into more detail about the prints, remember the green prints means it traded on the offer, red prints mean it traded on the bid, white prints, here's one, between the bid and the offer, and these highlighted prints are through the market. Don't pay attention to those much. They only happen when there's frenzy. For example, a stock has a lot of momentum towards the upside, you'll see a lot of green highlighted prints. There's a lot of momentum to the downside. If something's crashing, you'll see a lot of red prints, red highlighted prints to the downside. So remember, green prints means it traded on the offer, red prints on the bid, and white in between. As you see, for example, here's a 1 penny spread, meaning this was between 161.22 and 161.23. So it could have been 161.22 half is what this white print went through. And usually white prints could be hidden buyers or sellers that don't want to show up on the level 2 and just hiding the order so you don't see if they're buying the bid or the offer. And we'll go through that in a little bit. So what you should remember is that for every buyer there's a seller, and every seller there's a buyer. So the very common mistake for new traders is that if it's printing red, that they're selling, and if it's printing green, they're buying. That is wrong. There could be a lot of momentum to the upside where they're taking offers and it'll show you a lot of green prints, and yeah, it means people are buying, but remember there's someone selling to them. And the same thing goes the other way. If you see a lot of red prints and it's something's tanking, continue to print on on the bid and shows you red prints going through, it means it doesn't mean that they're just selling. Again, there has to be a buyer for every seller. It's a market. So for this example, the last trade that was put on was on the offer for 500 shares at 35.91. It means someone paid the offer, which someone was sitting there and sold to them at the offer for 500 shares at 35.91. Before that, it was for 100 shares at the same price on the offer. Using the prints as an indicator. Shows you where the stock is currently printing and with what size. That's very important because it's in real time. It shows you where levels, shows you where volume is being done and at what important levels, and that's very important because you should always keep track of how much volume is being done at each level, and you should always gather information from that. And a general rule of thumb: the more volume that's being done at a level, the more important that level is. And with the prints, you can spot where their big buyers are, big players, and you can follow those patterns by how the prints are printing. There's certain patterns where, they'll print for 5 cents on the offer and then drop it down, print on the bid for 3 cents, and then print on the offer for 5 cents, and so forth. And as a tape reader, you got to pick up these patterns, and it will, like I said before, it won't happen overnight, but over time you'll slowly pick up things, and you'll start noticing patterns and be able to follow those patterns as buy patterns, as sell patterns, and to follow those big players. Okay, so right now we're gonna watch GS, and what we're just gonna do is gonna keep an eye on the print and just count how much volume it's doing at what prices. So right now we see 73 100 shares, 72 200 shares, 70 1 2 3 4 5 600 700. And you don't have to necessarily be know the exact number per price, but a general idea. Okay, so at 70, it's about 1,000 shares, 90, almost 1,000, like 700, 600. So you start to get a feel of how much volume it's averagely trading per price. So once you see an abnormal amount of volume, more than usual, then you'll be able to see it and understand and know that it has done more volume than the other prices. Okay, so go into more detail about the prints. Printing on the bid, printing on the bid and repeating on the offer. Generally, if a stock, keeps printing on the bid and at lower prices, that's a sign of weakness. Meaning, if on the print you see a bunch of red prints and the stock, is going down in price, it's a sign of weakness. The same thing goes vice versa. If it keeps printing on the offer at higher prices, that's a sign of strength. Very simple, yet something you should keep note of. If it continues to print on the offer, that means someone really wants the stock and are aggressively, paying the offer and the spread. They're not willing to bid for the stock, waiting, hoping that it'll get hit. That's always not the case, but with experience and more time tape reading, you'll know the difference. So just to recap that, if it continues to print on the bid at lower prices, it's a sign of weakness. Continues to print on the offer at higher prices, that's a sign of strength. That's tape reading 101. Big prints. So, stocks, they continue to trade nowadays, all those algorithms, and so, they trade about 100 shares, 200 share lots at a certain price. But for example, say you see, certain, just a couple hundred shares go through, then you see a huge print for 100,000 shares at that same price. That's, that's very important because those 100,000 share blocks are usually institutions. Retail traders don't trade in 100,000 share blocks. They trade a couple hundred, couple thousand, but not 100,000 shares. And, you should follow those and keep note of those big prints at what prices and see what happens to the stock after, because those are usually institutions, and they're the ones that dictate the order flow because they have an unlimited supply of money. And, it usually gives you a clue of what they're doing. So you should always pay attention and remember it. You should always remember how much, how many shares and at what price, and what happens to the stock after. That 100,000 share, print is now important. So you should always keep track of that. At what level, price-wise, and how much volume, and how much, that print was done for. For example, say it continues to trade at that price and the bids hold, then it's strong. If the bid drops, then it's probably going lower. So in essence, that means, you're printing on the bid at the same price, you see a huge print go through, and then that bid continues to hold and doesn't go lower, it's a sign that it's strong. It'll probably trade higher. But let's say the bid drops, it'll probably go lower. If it continues to trade at that price and the offer holds, then it's weak. If the offer lifts, then it's probably going higher. So it's the same thing as a bid, but vice versa. If it continues to trade at that price and the offers hold, meaning it's probably going to go lower. But if those offers lift and start trading higher, it probably will continue to go higher. You should watch the prints and see how they react to that price and size. Again, you should always keep track of the level and how much volume and how much that print was, and see what happens to the stock after. See, if the offers hold, the bids hold, if it trades higher or lower. Big prints are relative to the amount of volume being traded. For example, a 100,000 share print is not that significant in, for example, SPY, the S&P index. But for example, in a stock like Netflix, 100,000 share blocks is significant. It's important because it sticks out. And you should Also remember the amount of shares that traded per price. For example, get a general idea of how many shares have been traded per price of levels. Keep a general idea of an estimate of how much volume has been traded per level. Because you see a level with a lot of volume, you want to keep track of that level and play off that level because it's important. There's a lot of volume being done, more action, and that's an important level to trade off. So to go back to big prints being relative to the amount of volume being traded, like I said before, it's all relative. So if you continue to see 100,000 share blocks, 100,000 share blocks on SPY, then you see a 10 million share block. That's important. But the difference between SPY and other individual stocks, that SPY is an ETF, trades off. There's so many factors that go into SPY. Tapering on SPY is very, very difficult. Nothing's impossible, but it's very, very difficult. I don't do it. I use pure technicals when I do have to trade SPY. Sometimes some tapering will come in to play, but with SPY there's so many different factors. For example, the futures, the cash sentiment, individual equities, that are essentially the SPY. So when I do tape reading, I usually do an in-play stocks, individual equities with a decent amount of volume, not too much volume, because it's too much volume to keep track of. So just to recap this part, big prints are all relative to the amount of volume being traded. So if something's trading 1 million shares in a day, 2 million shares, 100,000 shares is pretty significant. It's about 5% of total volume. So you want to keep track of those. They usually stick out compared to other 100 share blocks in the current volume be traded. So when you see a big print, you'll notice it. It's very important. It sticks out like a sore thumb. You'll see 1. You see 1,000 at a certain price. Like, okay, that was a big print. I'm gonna keep track of that. I'm gonna remember it, and I'm gonna play off that level. Sometimes it means big print. Sometimes might be the end of an order that's being filled by an institution or algorithm. Sometimes, not all the time. Sometimes it could be the beginning of an order. But like I said, remember where those big prints printed, and keep track of those levels. So right here, we have an example of LLY, Eli Lilly, where there was a big print right here at 39.46 for 500,000 shares. It's pretty significant. It traded about 14.5 million shares at that point. So 500,000 share block is pretty important. You should keep track of that level. So when it did print this right here, it traded higher, right? And so we can see in this chart, it printed and it continued to trade higher for about 30 cents or so, which is very important, and you should keep track of that, right? You can see here it faded back down to about the general area, and it showed some support and closed a little bit higher and into the close. But like I said, big print, started trading higher, continued higher. So keep track of that and see what happens to the stock. Here's another example in Pandora. There are two big prints. There's a big print for about 1.5 million shares, which is pretty important because they only printed 13.3 million shares in a day. And what we see in this chart, we see this huge print right here, pretty much near the low. It started trading higher, started flagging, had a nice run to the close, and gapped up higher the next day for about 1.5 points. That's, like I said before, institutions dictate the order flow, so this is something you want to remember and keep track of. You saw a huge print there, and you saw it trade higher. See what happened. Now you see what happened to the other day, the next day, went about 1.5 points higher. That's significant in a $10 stock. So you should always keep track of big prints and what happens to them and the levels that they happened. A big print and big print higher. This is also an important indicator. It indicates that the stock's about to trade higher. For example, stocks trading at 50. There's a big print for 100,000 shares at 50. Trades higher, then you see another big print for 125,000 at 50.25. It means that the big institutions are willing to get more stock at a higher price and with size. You should definitely notice and pay attention to that because it's a bullish indicator. Like I said, it's very important because they're already getting their size, and then they want to get more size, more stock at a higher price. So that is a bullish indicator because they're not sitting around slowly trying to chop off 100 shares here, 1,000 shares here, 10,000 shares here. They're getting relatively aggressive, paying higher for large blocks. Same thing goes with big print and big print lower. You should also, keep track of this. It's also an important indicator. It indicates that the stock is about to trade lower. Very simple. For example, see the stock's trading at 2050. See a big print for 150,000 shares at 2050, starts trading lower. And you see another big print for 225,000 at 20. What's that saying? So the big institutions are willing to get rid or short more stock at lower prices and with size, meaning they're getting aggressive in the stock. Same thing with big print higher goes along with big print and big print lower, except to the bearishness. You should pay attention and notice this because this is a bearish indicator. Speed. This is very important because each stock trades with a certain rhyme and pattern. Not all stocks are the same. Your job is to recognize the pattern as a tape reader, as a trader. Basic rule of thumb: if it prints fast, it's important. Print slow, not so important. Let's give another example. When a stock is printing very quickly on the offer, then prints a lot faster, that's a bullish sign. It shows that buyers are getting even more aggressive in paying for the stock. It can mean it's about to break out, if it's at a resistance level, or a buy order is about to get filled. So with speed, it essentially just, it shows you that they're getting even more aggressive. And the faster prints means the faster trades are going through, mean the more aggressive they are getting. And the opposite, when a stock prints, is printing quickly on the bid, then prints faster, bearish. It indicates that sellers are getting more aggressive, and they're hitting the bids. And it can mean that it's about to break down if there's a support level or a sell order is about to get filled. And with this speed, you should notice if the offer steps down and gets taken quickly. Because say offer steps down and gets taken quickly, that means there's probably demand at that price. Because the lowest people are willing to sell at just got filled, and there's demand there. The same thing goes with the bid. Say the bid steps up, gets taken quickly, that means there's supply at that price. And finally, when it could step up and actually get holds, it means there's actually demand. But if bid steps up and gets taken very quickly, it means there's supply at that price. If an offer steps down and gets taken very quickly, that means there's demand at that price. If an offer steps down, lifts, quickly prints on the offer, then it means the stock is strong and the offer is being taken. It means buyers really want the stock. So let's recap. Say an offer stepped down in price. It lifts and it goes back up, starts printing on the offer, then it means the stock is strong and the offer is being taken. It means buyers are willing to pay for the stock and they couldn't hold the offer lower. Same thing goes with the bid. Say the bid steps up, then drops and quickly prints on the bid, it means it's weak. It means the sellers are in control. So pretty much with that, the bid's trying to step higher, it's trying to catch a bid and trade higher, but it drops and then just quickly prints on the bid consistently. It's weak. It means the sellers are in control. If a stock slows down, it's printing, it might not be in play at the moment. And if a stock overall doesn't print much, it's probably not in play and not not illiquid, and you should move on. In this video, we're going to watch Eli Lilly, LLY. I'm going to see how speed is an important factor to read the tape. So we see here some large offers at 39. I want to keep an eye on the speed here, and remember, you got to keep track of the speed. And what you're going to notice in this video is right when it sprints really quickly, like right there, so for example, prints really quickly, these offers decrement, and that usually is a sign of a breakout. So let's keep an eye, see what happens. See, printing kind of slow at 99 bid, 39. Right there, you see how it prints really a lot faster with some speed and the offers start decrementing? That is something you should take notice because it means it's about to break out or the offer is going to lift. And you see there, it printed, started to speed up, and it lifted the offer, and then again they re-offered at 39. So the point of this video is to keep track of the speed, and usually it goes relatively slow, or it goes at a certain pace, and then right when it's about to, right when it does print faster, it usually means it's about to break out or break down. And that's what I wanted to show you in this little section of the video, was just how when it went with speed, the offer did lift a little bit and then come back down, and it'll do it again, So right now there's a seller at this level. See it slow. Now speed's more. See how that volume just went through? A lot faster than it did before. And then again it went above. Again the offer lifted 01 after decremented, but yet it's still stuck there. So it means there's a seller there. But the overall point I want to get through this little video was that when there's once the stock starts printing faster than usually it has been, it's about to break out. And it did did lift that little offer there. It had a bunch of offers, but did come back. But the main point of the video was the speed of it. Okay, in this video we're gonna watch CHK right off the open, and what we're gonna watch now at the speed is how during different times of day certain stocks trade at different speeds. Usually right off the open there's a lot more volume, so a stock will be trading at a faster pace than usual. Before this you saw Eli Lilly, and that was more towards after the close, so it was a lot slower than usual. So while watching the CHK you're going to see a lot of prints go through, and do not get discouraged if you don't keep track of every single level, how much volume has been done per level, but just keep a track of the speed and the rhythm what it's trading at. Okay, and what you should notice in this CHK video is the speed where it's trading, and you should get a general idea of how much volume, just a rough estimate of how much volume has been traded per price. Okay, so you're going to do that by keeping track of the numbers here and by the number of prints on the side of that. And like I said, do not get discouraged if you don't completely understand or see what you're see what's going on the tape right now. We're just looking at just the general speed, and this is how usually a stock looks right off the open. Okay, and what you got to do is you got to keep track of the prints, the bids, and the offers. Okay, we see some bids there, trades higher, and you see a large bid there at 67, bounces off of it. We're going to keep an eye on that 67 cents here and see what happens when it goes back to the level, and see how fast it prints. So you see how it just runs through that price and then goes lower? That is something as far as speed goes that you want to keep track of, because every price it's trading very fast just right off the open, but we're going to keep an eye on that price right there because it kind of slowed down a little bit and then just ate right through it, and then it dropped and then quickly traded lower. So that's something you want to keep track of as far as speed goes while reading tape. Volume. Watch and notice and remember how much volume is being done at certain prices. It's very important when you're reading the tape and prints, as we talked about this before. You should always keep track of how much volume is being done at each price, and keep track of them. An unusual amount of volume being done at a certain price, then it becomes important. It's on a level you should know. Like I said before, basic rule of thumb, more volume done at a price, the bigger move that should be expected, and also the more important the level is. 100 shares traded at a certain price is not as important as 1,000,000 shares traded at a certain price. So the more volume, the more important that level is, and also the more volume that's being done at a certain price, the bigger the move that should be expected. Volume is all relative. It's all relative to how much stock is traded, how much you expected to trade at the price value level 2, and how much volume is being done around that level. Just because a stock does a bunch of volume and trades up doesn't mean you should be long. Same thing goes inverse. Because it does a bunch of volume and trades down doesn't mean you should be short. Tapering is where you get a bunch of indicators, level 2, the prints, and you gather them to gather information to make an overall assessment of a high probability trade. So also combine the level to the level with the charts to see what the tape has been telling you. So if you see the level on the chart and also on the tape, then that's important. You should keep track of that. The amount of volume done at at a level gives you an idea of how much it should move. So, for example, say a stock trades 300,000 shares relative to overall volume in its 10-cent range. You should if it breaks out, you should expect about 25-cent move. But say it trades 3 million shares in a 10-cent range, then it breaks out of the range, you expect at least a point. Alright, so let's recap. The more volume, the more of a move you should expect. And you shouldn't be stubborn. You should wait, see if the the stock doesn't do what you expect. But keep an open mind. You should always keep an open mind when you're trading. You shouldn't be stubborn, but that's your general rule. If it's 3 million shares, if it's a lot of volume, expect a larger move. Less volume, less move. You should factor that into your risk to reward setup. The amount of volume being done at a level gives you an idea how much you should move away from it. Okay. Big buyer with a refreshing ECN. What is a refreshing ECN? A refreshing ECN shows you, on the level 2, shows a few hundred shares on an ECN, for example, say ARCA, at that price, and refreshes to show more size after it's been filled at the price. So, say there's 200 shares on ARCA at $50, and the prints show that it just printed 10,000 shares on ARCA at $50, and then on the level 2, you see another 500 shares show up. That means it's refreshing. Alright? Let's give an example. Say the bid's at 50, offers at 50.10. See a bunch of red prints on the bid, for size relative to the overall volume. And at 50, the buyer just doesn't drop. That's an example of a big buyer, where offer is 50, 10, the bid is 50. See a bunch of red prints for size, way more than level 2 showing you. And the bid just doesn't drop. Shows you there's a big buyer there. You should notice how much they're buying, because if he buys a bunch on the bid, refreshes, and holds a bid, then it's a good entry for a long. And your X will be if he drops, because that's the reason why you got in the trade. And it makes for a great risk reward setup. Let's get another example. Say Bats is on the bid at 30 and they're showing 100 shares, but you notice a bunch of prints over 1,000 shares and he continues to hold that bid. Then that's he's refreshing, and he's it's a big buyer that's there. The buyer's hiding his size to try to accumulate stock. Doesn't want to stick his full order in the level 2, so you can be like, oh hey, this guy's buying 1 million shares. Let me just step in front of him. No, they try to hide it, so they don't want people to know. But through the prints, you can see what he's doing. And you can get long there to stop if he drops, and you should always follow the refreshing ECN. So say that buyer's on Bats, follow Bats and see what Bats doing, because that's where he's been buying through. And sometimes there'll be a big buyer at a price, say 50, and they drop the bid, for 5 cents and rebids the price back at 50. It's a big buyer. They do that, to shake people out. It's just a game they play. And you should always follow your plan. If your plan was to get out if he drops, you should definitely hit out. But you could always, re-enter the trade with a stop below the move. This is a more advanced technique, which we're going to keep it, very basic and fundamental. But it's just something I wanted to, talk about. And, say there's a bid of 50, and they're printing red prints, and the bid drops. This is the reason why there's a held bid there. But then the bid goes back up to that, and then principal in the trade higher. Buyers did that, and they shake you guys out. It happens to me sometimes, and it usually does that right before the move is going to happen too. Alright, so say they've been accumulating at 50 all day long, they don't drop the bid for a penny whatsoever. Finally they drop it for 5 cents and they rebid, and then they trade higher. Again, there's more advanced technique I go over on bidhitter.com, more of the advanced videos. And I just wanted to mention because it's important, but I would not be going over in specific detail because it's a more advanced technique, and I just want you to understand the very basics and the foundation of tape reading before we go on to the more advanced technique. Okay, so we're watching KR, and we're going to look for a big buyer on a refreshing ECN. Remember, these are the bids, these are the offers, and these are the prints. Red prints means on the bid, white between the spread, green on the offer. And remember what a refreshing buyer on refreshing ECN is. Remember, a refreshing ECN is when the bid shows a certain amount of size, and they're showing a lot more prints going through, and it refreshes, goes about the same or higher than the prints are showing you. Okay, so refreshing ECN is when there's a guy on the bid, they go through, they hit all the size they're on the bid, it holds and refreshes and shows more size on the bid. The refreshing is very simple because the bids refresh in size, and you'll be able to notice that when you're paying very close attention. So let's keep an eye on this KR. Let's keep an eye on this 24 level. Right off the bat, see a bunch of volume being done. We see a couple blocks for 3,000 shares, 3,400, 7,100, and just on the bid side, we only see about 700 shares here. Okay, so let's rewind that. Keep it on 24. Drops. It's only 800 shares. It go through, and the guy's just sticking there and refreshing higher. See, there's 2,500 bit shares there. That right there is a refreshing ECN, and you see that it went to that level. The bid held there, showed you a couple hundred shares. It printed a lot more than it was showing, and it refreshed, and it showed you at one point 2,500 shares on the bid, and it started to trade higher. So that right there, as simple as it is a refreshing ECN. The big buyer. I mean, the price dropped to that level. The buyer stuck there. They bought a bunch. They were hiding. They again refreshed the bid, meaning they showed more shares that they wanted to on the bid. Continued print, and then it traded higher. Big seller with the refreshing ECN. Same thing goes, vice versa, but on the sell side. So refreshing ECN, remember, shows a few hundred shares on the ECN at that price, and refresh so more size after it's been filled at that price. So an example of big seller is the bid is at 25 and the offer is at 25.10. See a bunch of green prints, which are prints on the offer, for size at 25.10, and the seller does not lift. I mean, does not go above that. So, that's an example of a big seller, and it's going to trade lower. And you should notice how much they're selling, and they sell a bunch on the offer, refreshes, shows us more size in the books, holds the offer, meaning it does not go above that price in the offer. And then, it should be a good entry for a short position at the stop. If he lifts, that would be a pretty good risk-reward setup right there, because you're literally risking about a penny on that trade for a potential 10 cents or lower. Another example, say ARCA's on the offer at 60 and they're showing 100 shares, but you notice a bunch of prints at 60, green prints on the offer, and it continues to hold. That means the seller is hiding his size, and is trying to accumulate stock. You can get short there with the stop if he lifts, and you should follow the refreshing ECN as well. So you should follow ARCA in this example. Sometimes there'll be a big seller at that price. This is the same thing as the rebid. Is an advanced technique. I'm just going to quickly go over. Sometimes there'll be a big seller at that price. They lift for 5 cents, and the offer comes back to that price, and it trades lower. And that's a reoffer. It's a game where they shake people out. You should follow your plan. Always, hit out of your original plan, because you could always re-enter to stop above that move. But that again is it happens, and you'll start noticing that after you learn the basic foundation and basics of reading the tape. But this is something I wanted to note. Like I said, it's an advanced indicator. But like I said before, I just want to go over the basics so I do not get you confused. But I just wanted to note that, and you will pick it up in time after you get the very basics down and reading the tape. Okay, in this video we're watching Starbucks, SBUX, and we're going to look for a big seller with a refreshing ECN. So let's take a look. Remember, these are the offers, and green prints are the prints that have gone through the offer or last traded at. So let's keep an eye on this. Remember, keep an eye on the offers, the size, and the prints. And remember, a big seller with a refreshing ECN is when it only shows a certain amount of size on the offer, yet you see a bunch of prints go through on the offer and then it refreshes and shows more size. 87, 88, 89. Okay, 94, let's keep an eye on that. 95, 96, 97. I see we see some offers there and prints 97s and 96, and they go again to show more size and trades a little lower. Let's keep an eye on that. 97. It's printing way more than 400 shares so far. Let's see how it went to 100 shares and back to 300 shares. then trade it lower. 96, same thing. 95. See how 96 is printing, 97 is 96, and you saw how the offer was held there 96, 97, and they kept increasing the size here, all while at the same time these offers, the offers are getting printed through here on the print. So that was pretty interesting because that showed there was a seller there at that 96 and 97 area, because it went to that price. They kept refreshing the ECN. It wouldn't go higher than 97, and they'll show more size on the offer. It wouldn't get above that level, and you can see from that it traded lower so far, 20 cents lower, and that alone signified that there's a seller with a refreshing ECN at that level. Let's rewind it. $92. Remember, we're going to keep an eye on these 96, 97 green prints, and we're going to keep an eye here. So we see 400, 97, 500, 600, and we see all that getting printed there, 600, 500, 400, and it prints lower. So that's what a refreshing ECN looks like on the sell side. Big buyer, big seller drops or lifts. Alright, so say we notice a big buyer is seller, and when we're on the opposite side of them, then we should exit assuming that it'll go against us. For example, say you're long Amazon, you own the stock, notice there's a big seller, then you should exit thinking it's going to go down because there's a big seller there. And if they lift, you can always re-enter long since they're done selling. Same thing goes the opposite. So you're short Amazon, then it's a big buyer. You should exit, think it's going to go higher. And if they drop, you could re-enter short once they're done. It isn't the only reason to get in and out of trade. Make sure all your indicators are in your favor. But general idea, if it's a basic trade setup, you should probably cover some or exit the position. Here's an example of a big buyer dropping. Right here at 42.70, we saw that there's a big buyer here and it did not drop. Finally, they dropped and proceeded to trade lower for about 30 cents. And this is only till 1 o'clock. This happened around 12:45. But general idea, big buyer here, it drops, trades lower. Big seller lifts. This is Eli Lilly. You see all these big offers here at 39, the whole number, up about 4% on the day. And what you're going to see, the next slide, is that it starts to decrement. You see a bunch of prints at 39. Then you see more bids on start stacking up here, and this starts lowering. And you see 39 here, it lifted, and it traded higher, eventually back down. But in this primary example, which I'll be showing you video, is that 39 had a bunch of offers, held the offer, it lifted. This is an example of a re-offer. Came back down 39, shook people out, and then traded lower before actually retesting it and actually lifting properly. Okay, in this video we're going to watch a big buyer, and we're going to see how it looks when a big buyer drops. So we're watching Best Buy, BBY, and we're going to keep track of the 40-cent area. But first we're going to see a big buyer, which I'll point out, and then we're going to see them drop. Remember, when you see a big buyer, you usually want to step in front of it if all the other indicators are in your favor. Right now, BBY is down about 9%, so it's not necessarily a good trade to be long it. But this does show an opportunity where you can get short when the buyer drops, if you haven't done so, or you could add when the buyer drops and so forth. So let's keep an eye on this, and I'll point out when I see the buyer show up. $0.39 kind of selling, they lift, trade higher. Just keep an eye. Okay, now let's keep an eye on this 40-cent bid right here. Now we're going to keep an eye on the exchange, the price, and how many are showing a level 2. And we're also going to keep an eye on the bids and the offers going through the prints. Okay, so we just saw it got smacked for a bunch of size, yet the bid is still there. and it actually refreshed, and now it's showing more size. Again, smack down, now it's showing 200 shares, 300 shares. Goes back to that price. Again, now showing about 900 shares. And yet the bid still stays there. So that's representing a big buyer, because you see this bid here, you're seeing a bunch of prints going through, more than average for every level that it's traded at. But you're also seeing that it's having some trouble getting below this 40 cent area, and you're also noticing how the bid continues to refresh. So it was first at 100 shares, and then the bid got there, it held the bid at 40 cents, printed a bunch of size through 40, as you could even see here, and then it refreshed, showing more size on the bid. So let's keep an eye, see what happens. About 400 shares, more than 400 shares is printed, yet the bid is still there. Right now there's a big buyer here at this 40 cent area. Okay? And we'd see that because it's having trouble getting below the bid. Now that big buyer drops. So the big buyer dropped to 40 cents. If you're long in front of it, you don't have a reason to be long anymore. Your buyer got out, you want to get out. But it's actually a good spot to add short, since the stock was down about 9, almost 10%. And you can see when that buyer dropped, it continued to trade lower and even to new lows. Okay, in this video we're going to watch Rig. There's a buyer there at 42.70, and we're going to see how they held the bid there. There's a big buyer, and eventually they drop, and then you see how it trades lower. So let's watch the tape on this. Remember, these are the bids, offers, prints, and we're going to keep an eye on the 42.70 level. Right now it's only showing about 600 shares. Right now it's printing about 500, yet we still have 200 shares left. So let's see what happens. Now you see there's still prints going on at 70, nothing lower than that yet. And you can tell the difference between the speed, because this is during midday. So the action's a lot slower than usual than, for example, the open. So it's a lot slower, it's a lot more passive. And reading the tape is easier during this time. So let's keep an eye. Continue to see 70 prints. We did see one at 69. But one thing you should notice is the bid went back up to the 70 mark. 42.70. Go back there. 70. We did see the bid step below to 69, but the offer never went to the 70 mark. And we did see a bunch of prints at 70, and then the bid went back to the 70 mark. So just keep an eye on that. Right now we see and notice that there's a buyer there at 70. So if you like the setup, technically, and all your other indicators show you that it's long, the tape just confirms there's a buyer there, so you can play against that level with the stop, for example, at 68 or so. Nine. Let's just fast forward so we see what happens at the 70 mark. I was trading low. Now remember, we're going to keep an eye on the 42.70 bid. And now we see that it refreshed from where it was earlier. And now we see a bunch of shares on the 70 mark. See, over 2,000 shares. So again, we're going to continue to keep an eye on this bid and the prints. We're going to see if the bid continues to hold. Okay, now the bid is back at 70. We see about 2,300 shares on the bid. So we're going to keep an eye on the prints and the bid. We're going to see if it holds the bid still there at 70. And we're going to see how many prints come through. Now there's only 400 shares, 600 shares on the bid. A lot more than that just printed. 200 shares at 70. We just saw a print for 400 and then went up. Now at 400 to where it was at 200. So from what we're seeing, the buyer is still there at the 70 mark and they're holding that bid. Tape reading 101 right there, 42.70 showing a buyer, something you do not see on the chart until after the fact. So let's fast forward. $42.70. Okay, now it's back at $42.70. Still holds. Seeing all these red prints at 70 and it just doesn't budge. Still holding. So there's still a buyer there at that $42.70 mark. And again, the tape's going very slow because it's during midday. It's around noon. So it's around lunch hour. I don't usually trade during this time, but this did present an opportunity and rig was in play that day. And again, shows 200 shares. Yeah, it's printing a lot more than 200 shares on the print and is still holding. Tape reading 101. They're currently holding the bid at 70. Big buyer there. Let's continue to watch. Let's see if they trade higher or if they drop. Eventually, from what we saw on the chart, it does drop. Let's fast forward. And we're going to see the same thing happening until eventually when it does drop. Okay, so 42.70, they continue to hold. Still bids there. And something you should notice that it continue to print at that level. Usually, you know, when there's a held bid, you want to see it bounce a little bit and continue to trade higher. But they keep hitting those bids and the buyer's still there. And finally, the bid dropped. Saw the bid is no longer at 70, but it's at 66 and the offer is below that 70 level at 69. And then it just trades lower, as you see from the chart. That once that 70 dropped, it just continued to trade lower and didn't go above that price. That right there showed you a big buyer and the big buyer dropping. Okay, in this video we're going to watch CHK. We're also going to see a big buyer and see that they drop. So let's keep an eye on the tapes and the bids. Remember, CHK trades a little bit more volume intraday, so it does have a faster speed and rhythm to it. So you got to be very, very focused while watching the tape on this. You got to simultaneously look at the bids, the offers, and the prints. Right now we're seeing that I trade up to 95 cents, and the offer is holding there, and doesn't, it can't get above that 95-cent area. And you could see that because the offer is holding there 95. See a bunch of prints, only a couple hundred shares, and it doesn't go trade above that. And it's trading a lot more volume at that 95-cent area than the other ones. But what we're going to watch now, since we're focusing on big buyers and big buyers drop, is the 85-cent area. So keep an eye on this 86, 85. Now you see 85 only has a couple hundred shares, and look at all these prints at 95 cents, and the bid doesn't drop. And now it trades higher, and we know that there's a seller at around 95 cents, so it's in a little range where there's a battle between 95 cents and 85 cents. 95 cents. Again, it's holding the offer, only showing a couple hundred shares, and it's refreshing, and shows a bunch of prints and cannot go lower. Excuse me, higher. Finally, the 95 lifted, traded higher. Now let's keep an eye on it. Remember, we had a buyer at the 85-cent area, and now it's back below that whole number, 96 a share. So still continue to keep an eye on it. See, went back to this level, below 96 cents, where it was previously a seller, and now it's going to see that 85 area and see if the buyer is still there or if they drop. 85, see only a couple hundred shares and a bunch of prints, holding. Now the bid dropped, and so did the offer below that. So that was previously a big buyer, and they dropped. So just to recap, we saw there's a buyer at 85 cents. We saw a little seller at 95. 95 sold a bunch, eventually lifted, but it couldn't hold above that level and couldn't, trade higher from there. And it went back down to that 95 area, went back to where the buyer was at 85, and the buyer dropped. So that was a sign, a bearish sign. They'll most likely trade lower because we saw a seller and a buyer. In that little battle, the buyer won, the seller lifted, but the stock did not continue to trade higher. It traded, quickly higher, back to that level and back to the 85 where the buyer was, and dropped. So let's watch the tape again on this. 95, 94, just couldn't get above it. We're still going to focus on the 85 cent area. See, look, 95 still on the offer and still printing a bunch of green prints on the offer. See at this 85 cent area how it's holding the bid there. Has, over 1,000 shares, almost 2,000 shares. Here on 85, we're going to see a hold there, not trade below. See a bunch of red prints through for 85. Only showing 100 shares. They just printed a couple thousand. Held there, did not trade below. It refreshed, showed a couple hundred more, and traded higher. So that right there is a big buyer. Alright, then previously was a seller, 95. Remember, it lifted, came back, the buyer just couldn't sustain, and they ended up dropping. Okay, as we continue to see big buyers and big buyers drop, we'll go back to that KR video. KR, we previously saw there was a buyer at 24 and traded higher. But we didn't continue to watch it thoroughly. In the second part of this video, we're going to see the big buyer that was at 24, and then we're going to eventually see that the buyer drops. So let's keep an eye on 24 on the bid and the prints. Now you can see there's a minor buyer there at 24.08, kind of holding the bid a little bit. Eventually it drops, so we're still keeping an eye on that 24 level. We previously saw that they held there. There's a big buyer at the 24 level. $24.05. Let's keep an eye on 24 and see what happens. So we see they're kind of holding, and remember there's a buyer there a little bit before this. See a bunch of bids. Start trading higher. So remember this buyer still looks like it's still there. Bunch of prints. Bids still holding. See all those prints at 24 going through. It's only showing 100 shares. Shows that the buyer is still there. And we'll only know when the buyer's gone. For example, right there, when the bid dropped and the offer stepped below that level, as you can see here. So let's rewind it. 24 drops, and the offer steps below and it trades lower. Okay, in this video we're watching EXPR, Express Inc., and we're going to watch it as it trades right off the open. We're going to keep an eye on a seller, and then the seller lifts. Let's get started. Remember, we're going to keep an eye on the offers, the bids, and the prints. as you can see, 35 has been showing a sell and has been having trouble getting over that price. You see the offers there, 2,500 shares, yet the 35 cents still holds, prints a bunch, lifts. Let's keep an eye, and now back 35 cents on the offer. Okay, so while you're watching this, keep an eye on the 35 cents. All these green prints are at 35 cents, and not be able to hold above it. Now finally it lifts. Now 35 is on the bid, 36. Now I should briefly trade higher. Okay, now 39. You see how there's 2,200 shares there at 39? We saw a bunch of prints go through. Now we see about 5,000 shares, and it just couldn't hold above that. Couldn't get above that. Printed a bunch at 39 and dropped down to 35, where was a previous seller. Let's continue to watch. Again, at 35 cent, if they're selling a bunch, lifts again. Now we're going to keep an eye on that 39 cent level. 39 cents, we have a bunch of prints. 39 still on the offer. There's still sellers there at that price. Now at 40, and finally lifts. Okay, so what we saw was there's a seller at 35 cents, and at 39, and had trouble getting above that price. And finally, when it did get above that price, it lifted. Briefly traded higher, went back to the 39.40 level. So as we're seeing now, it's continuing to hold here above the 40 level. Now what we're seeing is there's a 40 seller. So it lifted, came back, and what we're seeing right there is at 40. It's only showing a couple hundred shares on the bid on the offer. Saw a bunch of green prints going through, meaning trade on the offer, and it's holding. Right there, 40, bunch of size, and finally lifted. Meaning sellers were there at those prices and lifted, and now it's trading higher. It's above that price. And now 40 is doing volume on the bid, and now it's holding that 40 cent area. And now it's trading higher to new highs. So we saw it was 35 selling, lifted, 39 was selling, lifted, 40, lifted and came back to the 40 cents. Sellers showed up there, sold a bunch, and finally lifted and actually held above that level and then traded higher. Okay, in this video we're still focusing on big sellers and when they lift. We're keeping an eye on Groupon. This is the day of the IPO, so it's going to be really volatile. So let's keep an eye on it. We're going to keep an eye on the offers, and keep an eye for big sellers and when they lift. So right off the bat, we have 28 holding the offer. See the hold number 28 is going to come up. You see a bunch of prints come through at 28, and you're going to see it not lift. 28, 28, 28, seller. Right there, finally the seller lifts. So let's rewind that. And right off the bat, we see 28 selling a bunch. Big offer, trades lower for almost a point. So go back to the 28. I'm going to see it hold there, see a bunch of prints there at 28. And again, trade lower. Again, now finally goes back to 28 and lifts. Okay, now we're still watching Groupon. This is another video after it traded higher. Remember, 28 had a huge seller and it lifted. So that's something that's bullish. It's a bullish sign because there's a huge seller there and they lift. So the chances of it trading higher are really pretty high. So now we're going to watch Groupon. Let's fast forward. And remember, we saw 28 lift, so let's keep an eye on the offers, specifically at the whole numbers. Remember, it's still IPO day. So we have 30 here, selling a bunch. 30 is holding the offer, and you're seeing a bunch of prints there. For green prints at 30, and it trades lower. So now we know there's a seller at 30. 95 now selling some. See how 95 sticks there? See a bunch of prints at 95. It only shows like 100, 200 shares, and it's still holding there and doesn't trade higher. Now it lifted. Now 30. Seeing huge offers there at 30. So the seller's still at 30. $90. Now 90 is doing the same thing. They lifted. 30. Still a huge seller there. I see all these green prints. I'll still keep an eye on 30s. Still there. Huge offer there. They're just paying through the offer, paying the offer. And finally, decremented big time, so now it should lift. Finally it lifted. The big seller's gone. Hidden buyers and sellers. For example, if the bid is at 50.10 and the offer is at 50.20, but you notice white prints at 50.12 continuously, then that's something you should keep note of, because there could be hidden buyer or seller there. You should pay attention to that and gather information about it. If you notice the offer steps down to like 50.18 and they get taken immediately, that means the buyer willing to buy up to that price that you're selling at, and it's a bullish signal. And that alone presents a great risk-reward setup. Same thing goes to the bid. If you notice the bid step up to 50.12 and they get taken immediately, they get hit, and the bid steps back down, 50.10, that means there's a seller there willing to sell whatever price you're buying at, and that's a bearish signal as well. And that also provides a good opportunity for a trade. Hidden buyers. For example, this is Netflix. There are hidden buyers here. You can see it. You don't really see it on the chart. You see it more on the tape, but right here before the move started happening, there's a hidden buyer there, and you'll step the bids. The offers will step down, but they'll get taken immediately, and they'll go back up. So they're accumulating there, anything between the spread, and finally had a nice large up move for about 2 points. Same chart is the accumulation that we talked about in the introduction of this DVD, and the hidden buyer was was there, so that the bid was there, and there were a bunch of white prints, and offers tried to step down, but they couldn't actually hold, and now it's just they're accumulating for a large move, which happened very clearly. Pot, same thing. There's accumulation around this level here with hidden buyers, where there's about a 2 or 3 penny spread, and the offers just couldn't hold below it, but the bids stayed firm, and then eventually it traded higher. See here, this little area, bids couldn't really hold below, but the bids stayed firm and then traded higher. Same thing in rig. Little support, buying here, the offers could not step below. You saw a lot of white prints, and once the bid started stepping up and holding higher, traded higher. Okay, in this video we're watching DRI, down about 9% on the day in this video, and what we're going to focus on is a hidden buyer. So let's get started. So let's keep an eye on the bids and the offers, and keep an eye specifically on this 43.25 level. And you see is one white print, but continue to keep an eye on the bids and how much size there's on the bid, how many prints go through, and see if the bid actually holds at that level.
Close the screen.
Okay, so we see that bid held there at 25, didn't trade below that. Let's continue to watch, see if it does any volume at that level and holds. 25, showing about 2,000 shares. Alright, we see how it shows only a couple hundred shares now. Keep it on at 25. See how much volume it already traded there at 25. Now you see some white prints in between that on a 1 penny spread. Continue to keep an eye on that. You see how it refreshed and the the bid started to stack up a little more and started to trade higher. So right there we saw a little hidden buyer at 25 cents where it went down, did some volume, held, did more volume on the prints, and it was showing on the level 2 and started to trade higher. Let's continue to watch. 30's kind of holding, trades higher, and it goes higher from there. So again, let's watch that. 25 on the bid, about 2,000 shares or so. Putting on the offer, 30. Keep on this 25. Watch all the volumes being done there. See how it's holding, not going below. It's only showing 100 shares. Now 600,000. And it held there. So it refreshed. Had a little hidden buy there. And now it started to trade higher. Alright, so in this video watching Starbucks, I'm going to see for a hidden buyer and held bid in the 80-cent area. So let's keep an eye on the bid section and the prints. 584. 81, 80. And I'll keep an eye on the bids here, 80, and the prints. Okay? Now you see how the offer here is at 81 and hasn't gone below 80. Now the bid went back to 80. It's pretty interesting. And now you see how 80 is doing a little bit of volume there. How the bid's still there. Again, 81, 82 by 80. So that right there shows me there's like a little hidden buyer there. They're not trying, they're not really holding it below 80. And the bid's there at 80, so you want to keep an eye on that level. It's pretty interesting. Now it trades higher. So let's continue to watch this. See if it goes back to 80 and what happens at 80. Keep an eye on the bids and the offers. Okay, so now we're a little bit below 80. Now we need to get right back above 80 in order for there to be the hidden buyer there still. 79, 80, 79. And there, we're back above 80. Okay, so again, we're going to continue to see this, and for there to be a held bid, we want to see the bid actually hold the 80 level, not just spot this little hidden buyer. So let's continue to watch it. Now 85 kind of held into some volume, dropped. Let's continue to watch. 80, 79. We still want to keep an eye on the prints. 79.80. So there's still a hidden buyer here. Okay. Again, rebid 80, and the offer can't get below that. But what we want to see is a clean held bid at 80. But what we know already is that the offer can't hold below 80. And there's a hidden buyer in that area. 81. 82. 84, 83. 45. Now we're seeing the offers being lifted. Should trade higher from there. Back over 90. So that what we saw there was drop to 80. Didn't necessarily hold the bid, but there was definitely a hidden buy there because the offer could not step below. And we saw 80, it kind of held but kind of dropped, yet the offer couldn't hold below the 90 level. Okay, in this video we're going to continue to watch TXN. It's a different video, and we're going to focus on the 80-cent area where there's a hidden buyer and a held bid also. So let's keep an eye on the 80-cent area, and what we're going to see happens is that it trades down to 80, the bid holds, then it drops down to 79, but the offer can't get below 80. That's a little bit more of an advanced technique, but it still works as far as a held bid. And you'll see that on the tape, and we'll be going through it right now. So let's continue to watch this and keep an eye on the 80 level. Let's fast forward a little bit. Okay, now keep an eye here, and you're going to see how the bid is 80, 81, and you see how it gets 80, holds, bunch of volume, quickly drops, but then it rebids back to 80. And then you're going to see it, it quickly goes down to 79, but it goes back to 80, and the offer never dips below that 80 level. So it's just showing us a hidden buyer. And for example, say you saw the held bid right off the bat at 80 cents and your plan is to get out if it dropped and you got out, you could always re-enter and have a different exit as far as below 79, or if the offer actually holds below. So what we're seeing here is we're seeing white prints now. Remember, between the spread, it's a 1 penny spread, and it's showing you that there's a hidden buyer there. So we see that it traded lower to 80, saw a little bit of a hidden buyer there, saw the bid went to 80, quickly dropped to 79, but then quickly rebidded back to 80, and the offer never got below the 80 and started to trade higher. So let's go back. Well, let's fast forward to when it does trade back to that 80 level, and we're going to see the same thing happening. So we're going to see that the buyer's still there. I see 82s. See what happens when it goes to 80. 82 kind of holding there. See if it continues to hold. Drops. Right, now we see right there that now the offer's below. Now what we want to see is that it quickly gets above the 80 level, or it means the buyer's gone, and it quickly did that. So quickly dropped 80, 78, and you want to get, sometimes you want to give it a few seconds. Again, this is more a little bit advanced technique, but did some volume and quickly lifted. And now the bid's back at 80. Now it's holding the bid. See all those 80 prints, 80 prints, 80 prints, 80 prints, held bid. 79, white prints. And again, back above 80. So it can't hold below 80. It's holding above 80. Doing a lot of volume on the bid, 79 as well. But again, quickly gets back above 80. Now you see that 80 is a huge level and becoming an important level just because of all the volume that's happening there. And what you're seeing on this TXN is that it's getting below, but they're quickly bidding back above that level. Okay? So 80 again. $79, $80. Now I want to see it get back above that level. And it did. 80 bid again. And what that is showing is that there's a held bid there, and also some sort of accumulation, a little hidden buyer, and that they're not letting it go and hold below that 80 level. Right? So there's a buyer, the 80-cent area is 79, and what we're seeing is that again it's going down at level. They're just accumulating it, and then they finally let it run. And as we can see from this chart here, on this tick chart, is that it drops down. 80 held the bid, quickly went down, couldn't hold. The offer couldn't hold there. Traded lower, did some volume here, held, quick pop up to new highs, quick pull back here, and then continued to trade higher. And it did trade higher for the rest of the day from this 80 level. As you can see from that spot right there, that there's some accumulation at the 80-cent level, and it gave you a great trade to get long for great risk reward onto the upside. Okay, so right now we're watching Best Buy. We're going to look for a hidden seller. So let's pay attention to the bids, the offers, and the prints, and focus very closely because it'll pass by very, very quickly. Right now we see 50 on the bid, 51 on the offer, so my print 50 kind of holding there, and drops. 42, 45, 46. Right now we see a 3-cent spread between 43 and 46. Keep an eye on the prints. Now we see 45 on the offer. 44 trades lower. Continue to watch. So we see 37 kind of holding. Now we see a bunch of these white prints at 36. Okay, so we saw a bunch of volume being done at 37, and then let's fast forward, rewind that. So what we saw was 37 hold the offer a little bit, and then we saw there's a bunch of white prints at 36, and previously there was a mini held bid at 35. So it means the seller's getting very aggressive closely to that level. Watch there, 36, 37. We see a bunch of white prints, even though it's a 1 penny spread. 37 was holding the offer, trades lower, see if this 35 decrements and drops, and that's a hidden seller. Okay, in this video we're going to watch for a hidden seller on Eli Lilly. Okay, so let's keep an eye and let's remember some levels while we're trading. So right now we have 89 by 91 spread, see a bunch of prints at 90, and right now 90 is at the offer. Okay, so let's rewind a little bit. You saw a couple white prints there at 90, and the offer's back at 90. So there's a minor seller there. Let's see if they actually hold, or if they're gonna lift. So let's continue to watch. 90, 89. Okay, you saw how it went above 91, gets smacked down. See a bunch of white prints at 90, 89. So that I find interesting. And now we're trading above it. Let's continue to watch. And to spot a hidden seller, you gotta pay attention to all the information you're gathering from the prints and the bids and the offers, because sometimes it happens very, very quickly. So now we're back below the 90-cent offer, okay, that we previously saw. So what I would like to see is that 90 continues to sell some. So we see 91 by 90, see a couple white prints there, okay, still above it. And what we're going to have to see in order for, to not be bearish on it, I guess, is for the bid to actually hold at 90. And we haven't been able to see that. What we have been seeing is a 90 holding the offer and, a couple white prints there. Okay? Continue to watch 90 back on the offer. You see how it's holding? There we see a couple prints at 90, 89. Now we see some size go through. Now we see a bunch of green prints, a bunch of size go through 90. Now it's holding as of now. Let's see if it continues to hold. 90 trades lower. Okay, it hasn't gone this low before. Let's watch. See a couple white prints, 90 back on the offer. 88, 89, 88. Okay, white prints. Keep an eye on these white prints. Remember, the spread is only 1 penny right now. 90. Okay, it's back above that level. See if it can hold. No, and it's back down to the 90, 91. So right there's a little hidden seller, because it's not, it's not able to hold above it. There's a little held offer there. And continue to watch. Okay, right there we have 86 white prints. Yet it's only a penny spread. Okay, and now it trades lower. So right there was your tell. What we saw were some white prints there, holding lower. So rewind a little bit. So remember, we have a 90-cent seller. See a couple white prints. Okay, right there, 86 bid, 87 offer, 1 penny spread. Yet we're still seeing a bunch of white prints come through. All right. So let's see what happens, see if the bid can get above that, and no, it trades lower. So that's a seller, and we previously knew that because it was 90 was selling, and now 86, and now it's trading lower. And to see how effective that 89, 90, and 86 seller were, we saw a big run up in LLY, and we saw them selling in this area, 86, and then it traded lower, all the way down to about 39.30 after consolidating and bear flagging. Okay, in this video we're watching Starbucks. We're going to look for a hidden seller, so let's watch. Keep an eye on the bids and the offers, and the prints. $97. Okay, so we see there's only a couple hundred shares being offered at 97. Okay, so right there, saw a bunch of shares at 97. Prints holding so far. 97 right there. Again, holds, bunch of prints there. It trades lower. Okay, doesn't lift that 97. We see it dropped to 95, 94. Yet we see a bunch of white prints at 95. Only 500 shares or so, but it's still meaningful. So we saw 97 kind of hold, and it went to 95 where we saw a couple white prints, and it traded lower. Okay, let's continue to watch that. 90 cents. Now it trades lower. Okay, so let's do it one more time. So we're seeing right off the bat Nine has a pretty decent offer there. About 3,500 shares, more or less. Prints lifts. $97 offer. Couple of prints there. I'm showing 200, bunch of prints go through at 97. Quickly went, price dropped after. Now we saw 95 only show a couple hundred. Yeah, we saw a bunch of these white prints. In the seller, 95 still there. And it trades lower. Probabilities. The indicators that we mentioned before are usually reliable. Trading is a game of probabilities. So the more indicators in your favor, the higher the probability. You should always have more than one indicator in your favor, not just one. Some indicators can be false sometimes, but like I said before, the more indicators in your favor, the higher probability of the trade working. And you should have multiple in your favor for a trade, including technicals to spot a high probability setup with good risk reward ratios. Finally, using the prints and level 2 together. When you're reading the tape, you're using the prints and the level 2 together. You're watching what's going on real time in the prints, and you're seeing what they're showing on the bid and the offer. Because by using level 2, you can see how much they're showing, and the prints show what they're actually doing. And this alone will give you a huge edge over traders. You'll be able to determine the amount of size you use and what your real risk is. It gives you an advantage over algorithms and high frequency traders, where like I said before, you're able to see what's happening in real time, and you see and follow buy and sell orders by the trading pattern that's happening in the print and what's happening in level 2. You could use both together. They'll provide great opportunities they're not in seeing the charts. So here's an example where you watch the bid that's in the level 2, and it continues to get step up, and the prints keep printing on the offer. Then you're using both of those to gather information that the bids are stepping up and they continuously print on the offer, so they're willing to pay the spread while the stock is rising. So that's a bullish indicator. What different prints mean, and some are bullish and some are bearish. Different prints mean different things. The prints are your edge, and we'll show you if the stock is strong or weak, and you should use this information to develop a plan. Here's a little reminder. 1 ARCA means 100 shares on ARCA, 10 ARCA, 1,000 shares on ARCA, 100 ARCA, 10,000 shares on ARCA. Whatever the number is, you just multiply it by 100, and that's how many shares. Single digits are hundreds, which can be anywhere between 100 and 900. Double digits can be 1,000. Yeah, thousands. 1,000 to 9,900. Triple could be tens of thousands plus, and so forth. So here's some examples. The bid shows 10 ARCA, prints 60,000 shares on the bid at the same price and holds. It's a bullish indicator. Say the offer shows 10 ARCA, prints 60,000 on the offer at the same price and holds. It's a bearish indicator. The bid shows 70 ARCA, prints 9K on the bid and refreshes. Refreshing. Bullish. Offer shows 70 ARCA, prints 9K on the offer, refreshes. Bearish. The bid shows 70 ARCA, prints 7K on the bid, then the bid steps higher. That's bullish. The offer shows 70 ARCA, prints 7K on the offer, then the offer steps lower. That's bearish. The offer shows 70 ARCA, prints 70 on the offer, then the bid step higher. That's bullish. Again, the bid shows 70 ARCA, prints 70 on the bid, 7K on the bid, then the offer steps lower. That's bearish. The bid shows 500 ARCA, prints 7K on the bid, drops, and then rebids at the same price. That's bullish. That's more an advanced tapering technique. Same thing goes with the offer. Shows 500 ARCA, prints 5K on the offer, lifts, steps back down at the same price. It's bearish. These two are the advanced that I was mentioning before, but again, I have to mention it just so if you see it, you can, you'll be able to spot it. But I'm not going to go over in specific detail because it is more advanced and I don't want to confuse you. The bid shows 60 ARCA, prints 6K on the bid, drops, the offer steps down lower than the previous bid. That's bearish. The bid gets hit quickly and drop, and the price moves lower. It's bearish. Offers get taken quickly, lifts, and it starts moving higher prices. It's bullish. Say the stock is quickly taking the offers and taking the offers and taking the offers higher, but then won't take the next offer and slows down. Overall, it's bullish because they've been taking the offers, but it's bearish for that price because it finally slowed down and didn't take that offer. Say the bid gets hit, holds, then steps up, and gets hit, holds, and steps higher. Gets hit, holds, step higher, then gets hit, steps up higher, and gets hit and finally drops. Again, that's a pattern that you should focus on. See? Notice the trade on it. And overall, it's bullish because the bids keep getting hit and stepping higher. But finally, it stepped up, it got hit, and then it dropped. So overall, it's bullish, but it's bearish for that price that it dropped at. Say you see a big print, and the next big print is higher, it's bullish. So you see a big print, the next prints are lower. Next prints are lower, it's bearish. Big prints higher, bullish. Big prints lower, bearish. Big print, next prints are higher, bullish. Bids are tested and hold, that is bullish. Offers tested and holds, that is bearish.